Hey guys, Mike here. So another jam-packed video for you, and we're going to get into all the charts and also something that is happening under the hood of this market that if it continues, obviously shows that it definitely has legs. Doesn't mean there's not going to be ups and downs, but it's usually something you don't see in a bear market rally, okay? And so I just want to show that to you because that's how we roll in this channel. And also I'm going to address something, I'm not going to say somebody accused me of something, but just made a statement to me or whatever. And so I'm going to rant on that at the end and set the record straight on that. I have no problem setting the record straight on that issue. And so I'll talk about that. But I did want to start off by saying for a minute, hey, happy Father's Day to you guys. And as the saying goes, anybody can be a father, but it takes a real man to be a dad. Okay, so if you're taking the time to be a real dad, hats off to you. Give yourself a pat on the back because guess what? The job isn't always easy, and especially in the world we're in right now is a lot different than what I grew up in. And so sometimes the job is even harder, especially if you're raising a son, to try to make him into a real man, all right, and lead by example like you are, okay? So just keep that in mind. Again, for those who've been on the channel a long time, know I never had a dad. He died when I was 2, and so I know how important it is. That's why I take the job very serious. And so congrats to you. And look, I'm not taking any credit away from moms. I know how important moms are. They deserve all the credit in the world. But dads are just as important in their kids' lives. And for those who stepped at the plate every day to be there for the kids, you deserve some praise, okay? So give yourself a pat on the back, guys. So I just want to take a minute to say that, all right? So now getting into the market and stuff, I did want to start off with this right here and talking about banks, man. Look, banks, look, something's got to change here, right? I mean, look at these withdrawals. Eventually, you guys are seeing something positive come along. But the question is this really going to happen? Like, what do you ask yourself, put in the comments, like, what are you doing with your banks? Do you bank at a brick and mortar? Or are you going to one of these fintech companies? And the reason why I think banks actually have an even bigger headwind, not just now, but over the next coming years, is what this gentleman right here has to say in an interview that I saw yesterday with. He's into fintech companies, and I think he makes some great points. And so let me know what you think about this.
But financial services are guilty. Traditional incumbent financial services are guilty because they do not have the right tech or the business model to satisfy and to serve the vast majority of Americans. And I mean the Americans, the ones that I was just talking about. And so where the puck is going is fee-free banking, fee-free overdraft, fair and open and transparent credit. And so a lot of these regionals and the long tail of banks, there's 4,300 banks outside the top 10. Mm-hmm. And so, they have archaic infrastructure. They have the wrong kind of business plan to satisfy and serve the needs of everyday Americans. And so they need those fees to sort of stay alive. So there's going to be a big tail of M&A over the next 10 years.
That is a headwind, right? Because especially if you're used to paying no fees and stuff, right? And you go, well, you want me to go to brick and mortar and do what? And so I don't know. Just let me know what you think down in the comments because, but eventually, also understand, I'm not saying, understand regional banks, which there will be a lot less over in the last 2 or 3 years that we keep following the trend I showed you. Remember, they're responsible for like 88% of commercial lending or something like that, but they do a lot of business. There's a reason why they're out there. And so, you got to start seeing deposits flow back into them. Okay, let's just say that. And right now, it seems like everything I read, they're racing, trying to get rid of their commercial portfolios, to offload them on people and stuff. So we'll see how that plays out. Again, that's down the road. So we'll see. But now something that's happening, and it's been happening and continues to happen, is you got, 2 of the 3 leading industries in the U.S. large caps have now reached new highs with, as you can see, transportation lagging. And this is normally something they say you don't see in bear markets. The problem is, if you know the tickers, I try to look up tickers and stuff where this would go way back. But these tickers on the sides didn't go as far back as I wanted to go to see, I like to be able to prove this and stuff, but I really couldn't do it. But you can see what you're getting is obviously these rounding bottoms right here where you get the move up, and that's what it's forming. So transports definitely could be the third of the 3 here heading up and stuff. And, when I made a comment yesterday that there is historical precedence to where we have actually sold off before ever hitting a recession. And so I said that in yesterday's video, if you watched it, that's what they did last year, sold us off too early. And I was trying to get these tickers to go back because I wanted to look and see if that's what was happening during the dot-com bubble, because it's really the closest comparison in a way, right? Because we were setting it, some higher rates, whatever. We didn't have a problem with inflation or anything. But when you look, what they did was they sold the market off too early, right, before the official recession. And we don't know we're in an official recession until like a year later. and everything. But when they sold it down, you can see we're below that trend line. All of a sudden, it goes up 26%, right? And then heads back down the trend line and continues to crash because we're in a recession right there, right? And when you look down at the bottom, that's currently today. And you can see what happened last year. They end up selling us down almost the exact same amount, around 26%. And then, of course, we start to recover, break that trend line, trace back down the trend line just like above, but then we bounced, right? Because obviously, I'm not saying these are identical times at all. I'm just saying when you look at it, that's what you see. And again, we won't know we're in a recession for a while. We're definitely, as far as I'm concerned, not in a recession, maybe in certain areas. But, I wanted to see those three sectors on this to see if that's what they were doing when it rallied in 2001 or not. And so, again, I'm not saying that's what's happening, but this is the easiest comparison I can make, because if we do actually things get bad in the fourth quarter or first quarter next year, whatever it is, then of course when they start selling us back down, that's what happened in the dot-com era. So, just want to let you at least see a visual on that. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And that leads me into the charts for the S&P. And understand, when we say there's going to be a sell-off or a correction, whatever you're saying, it's not saying 20, 30%. It's just saying, you see the RSI telling us, hey, when you see this divergence, we're heading lower, right? And then the markets are still heading higher. And then you're overbought like crazy. Yes, there's going to be some kind of pullback, whether it's 3%, 5%, 10%. Now, I don't mean it's going to happen tomorrow, because you're seeing a lot of euphoria in the markets, right? And a lot of money coming off the sidelines, piling in, shorts covering, this kind of thing. And so keep that in mind. You got the MACD rolling over and everything. And of course, this is on the hourly. And we go to the daily. We're going to get rid of that. And you can see, I was talking about saying overbought. MACD, it's all stretched out up there. But again, what do we keep trying to do? Really, it's, I don't know, people are saying, hey, 450, 4,500 on the SPY. It's definitely in the cards. There's no doubt about that. If it continues up and the market, more importantly, continues broadening out. That's really the key. And look, you're not that far away from all-time highs. That's like 8.5%, I believe it is, from all-time highs right now. And so when you're doing a percent and a half every day, that gets covered pretty fast, right? So we'll have to see on that one. And then the Qs, of course, you're kind of seeing the same thing, right? RSI definitely was telling us a story right here, not to the same extent and everything. MACD rolling over, all this is on the hourly as well. And you can see in the past here, and I can show you some even bigger sell-offs on this, but you can see, the RSI is saying, hey, man, might want to get you a warning here. Here's some divergence, right? And the market kept going up. And then, of course, it did a nice pullback to the trend line, about 3% or whatever it is. And, you see ones in the past that are 5%, 10%, that kind of stuff. Remember, the stocks will be down way more than that. And so just keep that in mind when we're moving forward here. NVIDIA, of course, this is just a wrecking ball right here, man. Continues to move up. This is the daily. Keep setting new highs, right? The RSI continues to be overbought, but again, they can go on for a long time. On the hourly, you can see the MACDs starting to turn over. RSI is coming out of overbought and everything. And, the one thing to really look at on this right here is, with these patterns we're seeing, will we end up getting some kind of rounding top on this where it finally starts to cool off? We're going to have to see, because right now what you're seeing is big money, large institutions are still buying at these levels, right? So just keep that in mind. And this is just one of those stocks I've showed you in the weekly multiple times. It can do slight, real small pullbacks and just stay overbought for absolute weeks on end, right? I've showed you where it stayed bought for over a year one time, or actually a couple times, I think. And so just keep that in mind. But again, way overextended. All these end the same, but this thing could run all the way up to basically his next earnings call. We'll have to see. And so, Apple, another one, setting new all-time highs again. Right, every time you think it's going to maybe finally get a pullback, this trend line right here, maybe a little consolidation. Heck, maybe it wants to close some of those, gaps down below. But nope, just continues to move up, which means who's buying? Institutions, right? They're rolling into Apple. And I've showed you, I don't know if it was a members video or you guys, but I told you, I think it was a members video, where I say, I didn't realize that a lot of institutions, once a fund manager sells their stock like that in Apple, somebody else within the same organization is going to buy it up, which means they won't be able to buy it up because the institution as a whole only has a certain amount of shares they're allowing their people to own total. And so that's one reason Apple is one of them for sure. Maybe Microsoft's another, where you just don't see that downward pressure. You didn't see it last year. And like I said, many people got tired of hearing it. If the market don't sell off, you forget. If Apple don't sell off, excuse me, then the market ain't selling off. That's just the way it is. Okay, it's almost a $3 trillion company, for God's sakes. And you can see, to fill all those gaps, it will be a massive move down, which would be a huge, huge correction, which, I mean, you can't imagine at this point in time that happening. But if there's a recession, you can definitely see it happening, right? And what's Microsoft doing? Setting all-time new highs as well, right? I mean, this one's another juggernaut, being treated pretty much just like Apple, obviously. And so, you know, again, it's another one that keeps leaving these gaps behind, but it's Microsoft. I'm going to extend that out a little bit right there so we can watch that. You know, it's got this trend line right now. It's kind of just riding up as we go right here. And for it to be doing this, that means big hedge funds and everything are coming off the sidelines, Quant Fund, everybody else. Big money still rolling in, right? And let's see on the hourly if we get a bounce off this trend line, because it's been respecting it basically since the 7th. So we'll see how that works. And of course, we'll have to see how, you know, this is a short week coming up. Tuesday through Friday we're open, so we'll see how the markets, if they can continue this rally up or not, are going to finally take a breather, which is not a bad thing, by the way, just FYI, especially with now that we got $4.2 trillion in options and everything expired, Claude Witching out the way, March monthly OPEX, all that good stuff, right? So we'll see if that frees the markets up to do, you know, what it wants to do. So, you know, that leads me into, somebody had sent me an email and then somebody else had commented in a video or something saying, you know, that the way I sound, and maybe I come off like this, I don't know, that, you know, I don't like capitalism. I think that's what the way they were trying to put it to me, or I don't seem like I do. And if I come off that way, let me know in the comments. But, you know, I'll be very clear about that, because I love this subject and you kind of know how I am. So, you know, absolutely love capitalism. And as somebody said in the comments, what I hate is crony capitalism, right? I am a person, maybe I'm just old school, maybe I'm in the minority. I like a fair playing field, you know, and right now that is not what we're getting. Yes, I am a big proponent and a big fan of family-owned businesses, small businesses, you know, the American dream. That's what I'm a fan of. Okay, I've got plenty of people in my family, my wife's family, own their own businesses. We discuss this a lot about how times have changed. My father-in-law started his own business, you know, and he said some of it was doing luck, but, you know, guess what? He ended up selling it for a fortune. And, but like he says, even he says today, he goes, this ain't the kind of world I got my business up in. This is a lot tougher, because his son owns a business too. We talk about it all the time. It's a lot tougher world, and the reason why is because things shifted. Things shifted in the late 70s, early 80s, to where companies, big businesses, used to pay legally, bribe politicians by donating their campaigns to stay out of their business. Then they realized, hey, wait a minute, instead of doing that, why don't we just pay them to do our business, to help us out, right? And to help us grow bigger and bigger and bigger. I mean, is there such thing as a monopoly in America anymore? And so why don't we have that? Because the politicians, obviously, through them getting campaign contributions and things like that, pass laws or just ignore laws that are actually already on the books to allow these companies to get bigger and bigger and bigger. And what does that do? It squishes people like you and me if we try to go out and start our own business, right? It has decimated family-owned businesses. I mean, family-owned businesses that have been run for generations are gone. Okay, my wife's family, a lot of them are in the farming business, right? Brother-in-law runs a farm. He tells me all the time how tough it is to keep it going, right? And so, and I mean, a prime example, I got to see this firsthand. I worked for a family-owned business as a teenager, for one of the second jobs I ever had. It had been in the family for 4 generations. The original founder fought in World War II, you know, came back home, started the American dream, right? I mean, got a family, bought a little piece of land right there on the corner before the roads were all paved back in the 40s, late 40s, early 50s. Set up a little fruit and veggie stand that turned into a brick and mortar store, which he ran till he passed, and his wife took it over, and his daughters took it over, and his grandkids took it over, and that's when I came on to work for him and stuff. And then what happened? We were in a small town. Walmart moved in. Guess what? What happened 2 years later to all the family-owned businesses in that town? Gone. Disappeared. Why? What is their game plan for them? And I'll show you right now. I'll show you something real quick. There's actually a phrase for this. They move in, especially small towns. They lower their prices. They pay more for wages to get people in, right? And because they can handle, because they're bigger, they can handle the sustained lower margins, because they know over time it's going to run these other companies out of business. And then once they run them out of business, what do? They raise their prices up, freeze wages, or lower wages, right? Because there's nowhere else free to go. All right, and I'll show you, it's called the Walmart effect. And I would strongly encourage you just to type in Google, how Walmart runs small corporations out of business. and it's called the Walmart effect. And the Walmart effect usually manifests itself by forcing smaller retail firms out of business and reducing wages for competitors' employees, right? And if you just scroll down, you'll read great articles. This has been going on for decades. And, really, this comes as an excerpt out of a book I read a long time ago, which sums up how I feel. American markets, once a model for the world, are giving up on healthy competition. Sector after economic sector is more concentrated than it was 20 years ago, dominated by fewer and bigger players who lobby politicians aggressively to protect and expand their profit margins. Across the country, this drives up prices while driving down investment, productivity, growth, and wages, resulting in inequality. And this is being done on so many levels, right? So, for example, one level is the tax system. I mean, you got study Nike. They're experts at this, right? Of absolutely avoiding paying taxes in this country and in the EU, all kinds of other countries, by just having really smart lawyers and accountants. And it's all legal. It's all legal because guess who made it legal? The people they're legally giving money to say, hey, can we make sure this happens? Now, can smaller corporations and family-owned business take advantage of that? No, not really. They can't do it. They can't afford to hire a whole freaking accounting firm, that has 300, freaking stories in a building or anything like that. So no. So guess what? They're able to build up more capital versus a smaller business to take on this fight and, put it to them. So that's not fair either. So it's on many different levels, right? Another company who I won't mention, allegedly, but we know it's not. What they used to do is come into a town, and what they would do is once they opened up, they would tell the vendors, hey, if you want to do our bit, take our business, which is worth way more, guess what? You can't supply them anymore. Mind you, these family-owned businesses, these small businesses, had absolutely been using these vendors for years. So now they're scrambling, having to try to find new vendors, try to keep the same prices, which is almost impossible because you don't have the relationships with them. And so that's a whole nother thing they do. It still goes on to this day, and it's all legal as far as I can tell, right? And so what's happening is, picture two fighters in the ring and a referee, and the big conglomerates, they're fighting with both hands. And you and I are, these smaller companies are fighting with one hand behind their back. And then the referee, who's Congress, right? Because they're getting paid off by the big corporations, the fighter with two hands, they're not even refereeing the fight equally, right? And applying the rules equally. Okay, that's what's happening. So yes, if that makes me a bad person, then I guess I'm a bad person, because that's just not what the American dream was about. That's not what we were founded on or any of that stuff. I mean, people have been coming to this country for generations trying to do that, right? And every decade it seems like it gets harder and harder and harder, and these big companies just keep growing and growing and growing, right? I mean, Walmart has 25% of the grocery business. I'm not just picking on Walmart. They just had to be a company everybody knows, and I know a lot of stuff about them. 25%, one company. 4 companies have 85% of the corn productivity in this country. So no, that is not fair. That's not right. It is. I mean, we've allowed it to happen. We fell asleep at the wheel, right? Now, what I do with my time is there is definitely certain brands I do not buy. Once I find out about certain things, I'm good not buying them. I'll go over here and support these people over here. That's just the way it is, right? I'm old-fashioned in that sense, I guess. But yeah, so that's where I am. I love capitalism. I don't like crony capitalism, and I believe in a fair playing field. So for anybody who wondered, and for those who question me on that, there you go. Hopefully that answers your questions. Again, happy Father's Day to everybody. All right, I'll see you tomorrow. We'll get set up for the week. It's going to be a 4-day week, and I hope you have a great Father's Day. Hey, don't forget to hit that thumbs up down there for me. I appreciate it.